Okay, so you're ready to dive into the intelligent investor.
This one is really a classic.
It's legendary for a reason, right?
Absolutely.
And we're going to unpack why it's even more relevant today than it was back in, what, 1972?
1949.
Oh, was it 49? Oh, wow.
The first edition, yeah.
Okay.
And then updated in 72.
Okay, got it.
So yeah. But still,
Timeless principles?
timeless, and we're going to help you apply it to your own investment journey today.
Yeah, and it's fascinating how it speaks directly to the challenges we face in today's market. Almost like Graham could see the future of investing.
It really is amazing how he cuts through all the noise with this idea of the intelligent investor.
Right.
And, and it's not about having like a PhD in finance, is it?
No, not at all.
He seems to be saying that it's more about mindset than anything else. It really is. Graham's emphasis on temperament over IQ is more relevant than ever.
Yeah.
I think about it, we're just bombarded with information now.
Right.
Every day, everyone's looking for the next hot stock tip, and it's so easy to get caught up in the hype. But Graham reminds us that the real key to success in investing is discipline, patience, and the ability to think for yourself.
And not get your emotions involved.
Exactly.
Which is usually the problem.
Yeah.
That resonates a lot, especially after, the roller coaster ride that the markets have been on lately. It makes you realize that emotional decisions can really hurt your portfolio.
Yeah, absolutely.
Yeah.
Remember the Monument Internet Fund?
No.
So back in 1999, they were riding high. Everybody thought they were geniuses. Fast forward to 2002, they had lost a staggering amount of value. Like it reminds us of what can happen when you let your emotions drive your investment decisions.
Wow.
Yeah.
That's a cautionary tale if I've ever heard one.
It is.
So having a system, a plan, and sticking to it,
Yeah.
even when your gut is screaming otherwise, that's really what Graham is getting at, right?
Yeah, precisely. It's about not letting those short-term market swings derail your long-term financial goals.
Right.
Which kind of brings us to another crucial distinction that Graham makes. Investing versus speculation.
Okay, let's unpack that because I think, this is really where he's drawing a line in the sand.
Yes.
Between, building wealth over time and basically gambling, right?
He is.
Yeah.
And he doesn't mince words about it either.
Yeah.
Graham says, and I quote, "Investing is a unique kind of casino, one where you cannot lose in the end, so long as you play only by the rules that put the odds squarely in your favor."
Okay.
People who invest make money for themselves. People who speculate make money for their brokers.
So he's basically saying don't confuse Wall Street with a casino.
That's right.
Unless you like making money for your broker instead of yourself.
Exactly.
But seriously, that quote really cuts to the chase. But so how do we play by the rules and make sure that we're actually investing?
Right. Well, it boils down to this. Investing is about owning a piece of a business, understanding its value, and participating in its long-term growth. Speculation, on the other hand, is trying to time the market.
Right.
Chasing quick profits, often based on rumors, hype.
Oh, yeah.
And, frankly, bad advice.
It's like getting swept up in the frenzy of a gold rush.
It is.
Where everyone's chasing that same shiny object, but few are finding real gold.
Exactly.
Speaking of shiny objects, remember the dot-com bubble?
How could we forget? It felt like everyone was throwing money at anything with a .com at the end of its name, hoping to find the next Amazon or Qualcomm.
Exactly. And while those companies did thrive, there were countless others.
Oh, tons.
Do you know anyone, once high-flying darlings of Wall Street, they vanished almost as quickly as they appeared, leaving a lot of investors holding the bag.
That's right. And that's the danger of speculation.
Right.
It's driven by emotion, this fear of missing out. But as Graham reminds us, true investing is about logic, analysis, and a long-term perspective.
So if you're in it for the long haul, for building real wealth, Graham would say you're an investor.
You got it.
Not a speculator, which probably resonates with you.
Hopefully.
Right. You picked up this book for a reason.
Exactly.
So let's talk about one of Graham's most famous concepts, the margin of safety.
Ah, yes. This is where it gets really interesting.
Okay, I like where this is going.
So think of the margin of safety like a financial buffer zone, a cushion that protects your investment even if things don't go as planned.
Okay, I like that. So it's not just about buying a stock because you think it's going to go up.
Right.
It's about blowing it when it's priced so low, so much lower than its real value, that even if the market takes a tumble, you're protected.
You've got it.
Okay.
You've got it. And in fact, Graham said, the margin of safety is the difference between the percentage rate of the earnings on the stock at the price you pay for it and the rate of interest on bonds. And that margin of safety is the difference which would absorb unsatisfactory developments.
Okay. That's a mouthful, even for a seasoned podcast host like myself.
Right.
But the example that he gives really brings it home. The Washington Post company back in '73.
Okay.
They were selling for $80 million.
Right.
But their assets worth at least $400 million.
Yeah, that's a perfect example of what Graham called buying a dollar for 50 cents.
Right.
Now, you don't need to find deals that extreme.
Right.
But the principle holds true. The bigger your margin of safety,
yeah,
the lower your risk.
And I love that analogy, and it makes you think about how this applies to other areas of life.
Right.
Like you wouldn't drive at the speed limit in a blizzard, right?
Yeah, exactly.
You're giving yourself extra space.
Right.
A margin of safety just in case you need to react.
Exactly. Or think about your emergency savings.
Oh, yeah. Good point.
Right. That's your financial margin of safety in case life throws you a curveball.
That's a really good point. Yeah.
And Graham's essentially saying, apply that same principle to investing.
Yeah.
Don't bank on everything going perfectly.
Plan for the unexpected.
Right.
Because in the market, the unexpected is practically guaranteed to happen.
It is. It is.
Which is where I think Graham's analogy of Mr. Market comes in.
Yes.
Talk about a memorable image.
Yeah.
Right.
He's a colorful character.
Yeah. So this Mr. Market, he's not your typical Wall Street guy, is he?
No, not at all.
Graham paints quite the picture.
He does. He really does. Imagine Mr. Market as this unpredictable fellow who shows up at your door every single day, offering to buy or sell stocks in your business. Some days he's wildly optimistic. Other days he's drowning in pessimism.
Right.
And his offers reflect those wild mood swings.
That's terrifying and hilarious at the same time.
It really is.
It's like he's the embodiment of all the irrationality and emotion that we're trying to avoid as intelligent investors.
Exactly. Yeah. And here's the brilliant part.
Yeah.
Graham tells us we don't have to listen to him.
Oh, I like that.
We get to decide whether his offers make sense, whether he's severely undervaluing or overvaluing our businesses.
Right.
We have the power to say, no thanks, Mr. Market.
Right.
I'm sticking to my plan.
That's so empowering. It's like taking back control from all that noise and hype of the market. But how do we actually do that?
Right.
How do we tune out Mr. Market's manic depressive commentary and actually like make smart investment decisions?
Yeah, well, that's where the practical side of the intelligent investor really shines. Graham provides a framework, a set of tools, and even different approaches based on your investing style. He talks about the defensive investor and the enterprising investor.
I'm all ears. Tell me more about these two investor personalities.
All right. So the defensive investor is all about simplicity and stability. They're looking for steady returns. They're not interested in spending hours poring over financial statements. And they really prioritize minimizing their risk.
So low maintenance. Looking for solid long-term growth.
Yep. Think of them as the set it and forget it investors.
Got it. Who wouldn't want that?
Right.
What about the enterprising investor?
All right, so the enterprising investor is willing to put in more time and effort to potentially achieve higher returns. They enjoy digging into the research, analyzing companies. They're comfortable taking on a bit more risk.
So it's about finding the right fit for your personality, your risk tolerance, and even like how much time you're willing to dedicate to managing your investments.
Yeah, it's like choosing the right hiking trail. Are you up for a challenging climb with potentially breathtaking views?
Right.
Or do you prefer a more leisurely stroll through the woods?
I like that.
Right. Both are valid choices.
Right.
It's about knowing yourself and what you're comfortable with.
Okay. I love that analogy.
Yeah.
So once you know your investor personality, what are the next steps? How do you actually find these hidden gems, these undervalued companies that Graham talks about?
Yeah. Well, he provides a whole set of criteria for analyzing stocks. He looks at things like a company's earnings history, its financial strength, its dividend record, basically how healthy and profitable the business is.
So you're really looking under the hood.
You are.
Right. It's funny we talk about
due diligence.
Due diligence in business. But it feels like Graham is advocating for that same kind of thoroughness when it comes to like investing our hard-earned money.
Absolutely.
Yeah.
He wants us to understand what we're buying.
Right.
Not just blindly follow the crowd.
Right.
Or rely on hot stock tips.
Which everybody wants to give you these days.
I know, it's so easy, right?
Yeah.
And he doesn't shy away from getting into the nitty-gritty.
I was going to say.
Of financial statements.
The dreaded financial statements.
I mean,
I'll admit, that's the part that always makes my eyes glaze over a bit.
Yeah.
But Graham seems to think it's pretty important.
He does. He wants us to understand things like price-to-earnings ratios.
Okay.
Which basically tell you how much you're paying for every dollar of a company's earnings.
Right.
And book value, which is kind of like looking at the net worth of a company if it were to liquidate all of its assets.
Okay, so maybe not the most exciting stuff to talk about at a cocktail party.
Right.
But definitely crucial if you want to...
For sure.
Make informed investment decisions.
Right. And Graham understands that not everyone wants to become a financial analyst overnight.
Thank goodness.
So he also talks about investment funds.
Okay.
As a way to diversify your portfolio and benefit from professional management.
Okay, that's a relief.
So
mutual funds.
Yeah.
Index funds. Those are all on the table still.
They are. But even with funds, he urges caution.
Does he? Okay.
He's skeptical of those hot funds that boast about beating the market.
Right.
Through risky bets and high fees.
So it's about looking beyond the marketing hype and focusing on the funds that align with your own long-term goals.
Exactly.
Risk tolerance, that kind of thing.
Yeah. Graham's all about cutting through the noise to find what truly matters.
Right.
Whether you're analyzing individual stocks or choosing investment funds.
He's really saying, like, do your homework, folks.
Right.
Understand what you're investing in.
Exactly.
And don't be afraid to ask questions.
Ask the tough questions.
Right.
And he even dedicates a whole chapter to kind of the psychological side of investing.
Right.
Which I think is so important.
Yeah.
Because let's face it, we're not robots.
Yeah.
We bring our emotions to the table.
Always.
Even when we're trying to make the most rational decisions.
And those emotions can really trip us up.
Oh, absolutely.
Especially when the market gets crazy.
Yeah.
You know, fear and greed. Those are powerful forces.
They are powerful forces.
Huh.
And, you know, Graham knew that.
Right.
Remember Mr. Market?
Oh, yeah.
That unpredictable fellow we talked about earlier?
Right.
He's like the personification
Right.
of the market's irrationality.
Yeah.
Always trying to lure us into making those emotional decisions.
It's so true.
Right.
Oh, I remember him.
Yeah.
The guy who shows up at your door every day.
Every day.
Offering to buy or sell your stocks based on his mood swings.
Exactly.
Yeah. So how do we not let him get to us?
Well, we remember that we have a choice.
Okay.
We don't have to buy or sell.
Right.
Just because Mr. Market is having a good day or a bad day.
Right.
We can choose to be rational.
Okay.
We can choose to stick to our plan.
Right.
We can choose to focus on the long-term value of our investments.
It's like having a shield to deflect his crazy-making energy.
Exactly.
Right. But that takes discipline.
It does.
Which I think is a recurring theme in The Intelligent Investor.
It is. Graham reminds us that the most successful investors aren't necessarily the ones with the highest IQs.
Right.
But the ones who are the most emotionally stable.
Interesting. Okay.
Well, the ones who can control their impulses.
Right.
Resist the urge to panic sell when the market dips. Or chase the latest hot stock tip.
Oh, it's so hard.
I know, it's so tempting.
It's so tempting to get caught up in all that.
Yeah.
It's about being the calm in the storm, right?
Yes.
Sticking to your principles even when everyone around you is losing their minds.
Exactly. And that's what this whole deep dive has been about, right?
Yeah.
Helping you cultivate that intelligent investor mindset.
Right. We've explored Graham's core principles,
Yes.
the importance of, you know, really distinguishing between investing and speculating.
Sure.
The power of having that margin of safety.
Yes.
And the wisdom of not letting Mr. Market
That's right.
dictate our decisions.
Yes.
We talked about, you know, different investing styles.
Right.
How to analyze companies.
Yes.
Even how to choose investment funds.
Right.
All through the lens of Graham's timeless wisdom.
And hopefully you're feeling a little bit more prepared
I hope so.
to navigate the markets and make those intelligent investing decisions.
That's the goal.
Absolutely.
Thanks for joining us today.